Today's episode of Stuff Your Bookkeeper Isn't Telling You, we're going to talk about step one of how to have a very profitable business, and that is related to smart pricing. So stay tuned for today's episode. Welcome back to another episode of Stuff Your Bookkeeper Isn't Telling You. Let me bring on our co-host, Miss Lola Turner. Welcome back to the show, Lola.
Thank you very much. I'm very happy to be here.
Absolutely. Now, this is a exciting topic that a lot of business owners are trying to understand and trying to navigate, and that is, how do I become more profitable? Now, before we jump into the details of it, first, when you're talking to different business owners, how many business owners are seeing or recognizing that profitability is even a problem in their business?
I don't think a lot of people are recognizing it, honestly. In my experience, I think oftentimes it becomes reactive versus proactive, right? So we only start to do a profitability analysis when we realize, like, okay, the numbers look a little bit iffy, like the operating income is a little bit lower than what we expected. But really it should be proactive. So that just means, like, you should be doing this constantly and evaluating as you're making different decisions, whether it's discounts you're giving, or hey, you've given a particular discount on a particular deal. Like, you really need to be doing that ahead of time, so that when you do make those decisions, it's not a surprise and it's not an after the fact analysis. So I don't think a lot of companies and a lot of businesses are really doing it proactively and ahead of the impact. I think a lot of times I've seen it be reactive, because then when the issue happens, like, we're like, okay, where is this coming from? But in reality, it should be something we're kind of looking at actively and planning for. And I haven't seen this just for small businesses. I've seen this for large companies as well.
I've seen a little, I would say a little bit different from the
Mhm.
perspective that I think a lot of businesses don't even know whether they're profitable or not. I
Oh
mean,
yeah.
and
Yeah.
and it's
Yeah.
sad to
That's
say,
true.
but when I think about it, the number of business owners that if you ask them, how's your business doing? They might be able to tell you how much revenue that they're generating, but
Mm,
very few can actually tell you whether or not they're profitable. Like, are you in the black or are you in the red? Like,
yeah,
it's really, I think, to that point, like, they don't even know how to answer that question.
that's
And
true.
I think it's a two-part thing. Part of it is they aren't looking to find that answer, because if you want to know, you can find out. And then two, I
Hmm.
think their bookkeeper or their accountant isn't really communicating that with them. Because oftentimes what I find is someone who will tell me they have an accountant, and I'm like, oh, what you have is a tax preparer. That's what you really have. 'Cause
Yeah, 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 that's true. Someone who's booking the entries at the end of the year, and it's like, at the end of the year, really, like, fam, what are you gonna do at this point? The year is over. Like, you can't really change the strategy and the decisions that you're making in your business at that point, because it's at the end of the year. Like, actually, no, I take that back. A lot of times it's what, May, maybe April, March timeframe of the next year. And so that's actually a good point. There are a lot of business owners that don't even know if they're doing well in their business or not. Um, and I think, to your point, the reason for that may be because in certain situations, if the bookkeeper is just preparing the numbers, for example, and they're just sending an email, hey, these are what the numbers are, the business owner doesn't really understand, okay, what exactly do these numbers mean? Like, what kind of story do these numbers tell? And what do I need to be paying attention to make sure that I'm pivoting or making adjustments based on the numbers that you're giving me? And a lot of times that doesn't happen.
Now, I mean, you mentioned about, the accountants that kind of wait, that do really, they're just doing tax prep.
Hmm.
But and they're waiting to the end. They're not even waiting to the end of the year. So we're in June of 2022.
Yeah.
The average business owner is not going to know how profitable 2022 was until March of 2023.
Yeah.
And
Yeah.
when it comes down to that, it's like, do you think bookkeepers and accountants are like waiting that long because they just don't know how to do it? Or are they waiting that long because, the information just isn't ready? Like, why are they waiting that long?
I think it's two things. I think the first reason I would say is, like, for example, in the case of a tax accountant, I don't think it's a tax accountant's job to tell you how your business is doing. The tax accountant reports your numbers and prepares your taxes based on whatever happened in the year. Like, in my view, that's the purpose of the tax accountant. If you have specific questions or specific deals, you need them to help you kind of understand the tax implication of that and a tax attorney. Like, that's what a tax accountant is for. But in my view, like, even a bookkeeper to a certain extent, it doesn't really that's not really the purpose of those people for your business. And I think it's so important to understand the functions of each type of accounting and finance role to really understand what you should be expecting. So, like, I wouldn't fault a tax accountant for doing your taxes and booking entries, closing up your financials in March of 2023, because in reality, like, that's their job. If you are hiring someone and expecting that a tax accountant, and expecting that they will do that for you throughout the year, they may do it just to do it. But really, the purpose of an accountant isn't really to do the analysis. The purpose of an accountant is to book entries and to basically report the numbers, or to put the numbers together, make sure the numbers are accurate, but they're not necessarily responsible for kind of helping you tell the story. So, reason number one, I think there's a misunderstanding of roles. So, I think the other reason is, in some situations, you don't have clear expectations with the people that you're employing, or the services that you're employing, on what exactly you expect from them. When you hire a bookkeeper, sometimes they might just be thinking, if you don't make expectations clear, my job is just to close the books, right? Like, my job is just to make sure that everything is reconciled, all your chart of accounts are good, like, it makes sense, it's put together. But they're just downloading that QuickBooks statement, or downloading whatever system you're using at the end of the month once everything is reconciled, and they're emailing that to you. And you're just there confused, because you're like, what the heck am I supposed to do with this? I don't know what this means. Like, I'm focused on trying to run my business. And so sometimes I think it's just there aren't clear expectations. And I think sometimes you expect things from people that really don't have the expertise to give you the answers that you're looking for and the answers you need.
No, I think those are really good points. I mean, I want to go back to the first one where you talked about kind of the roles about, most people aren't really working with a bookkeeper. Like, they don't understand the difference. What they're probably working with is a person who prepares their taxes. And in the
Mhm.
process of preparing the taxes, the person may do this massive catch up activity
Yep.
where they
Yep.
go back and they say, okay, all right, well, in order for me to file your taxes, I have to have a profit and loss and a balance sheet to look at. So they
Mhm.
do this massive cleanup effort just so they can get the financial statements. And I'm wondering, is their goal to get the financial statement so that they can tell the business owner, hey, here's how you're doing? Or is the goal just so they can check the box on their tax compliance work?
Let me tell you, I'm going to give you an example, because this happened to me, like, very recently. Working with someone who, they have employed, or they had employed, a tax accountant in their business. And this tax accountant was basically, like you said, at the end of the year, they make sure they have a P&L, they need a profit and loss statement, they need a balance sheet. So really, what this person was doing was their job, right? They were just trying to make sure that the statements that they received, like the 1098s, of the income or the interest and stuff like that that was paid, which is, all those receipts you get at the end of the year, basically, that said, hey, this is how much you paid in interest, or the 1099s that say this is how much revenue you made, or whatever. Like, for example, if I use an example of, like, a rental property or whatever, their tax accountant's job is just to make sure that the numbers tie out, right? Again, accounting accuracy. So their job is just to make sure, like, hey, what you have on paper and what you're reporting as your income at the end of the year based on what the IRS reported or people are sending you matches what your profit and loss statement is saying. Like that's the goal for them. In most cases, they're not really interested to then sit down with you and say, "Hey Lola, like we looked at your numbers like this, and based on the expenses that you had, and based on these journal entries we booked, like your business isn't doing so great. Like you probably need to do something different." No, they're just trying to make sure that you don't get in trouble with the IRS and you report every single thing you should have reported. So for me, I don't think the goal, and neither, I don't think it should be either. I don't think the tax accountants should be telling you how your business is doing. If they're doing that, that's extra. But I really think you need to understand those roles. And personally, for me, based on what I've experienced, and just even on the technicality of things, the tax accountant is there to make sure that your numbers are reported accurately and what you say on your tax return matches what the IRS has records of, nothing less and nothing more. And I don't think when you come to rely on them for that, you will definitely come up short.
So one of the things that I think about is when it comes down to tax planning,
Mhm,
because if a person's going to do some tax planning and they're looking at it and they're like, okay, all right, I'm going to do I'm going to give this client some advice. Do they
mhm.
have to have regular insight into, hey, how profitable is this company being throughout the year?
And you're talking about like from the standpoint of like a tax accountant or just
Yeah,
like
so like
someone
for
that's
the tax, so let's say, it's June, like right now when we're recording, it's June of
Mhm,
2022. So
mhm.
a good tax accountant who's trying to provide advice to their clients about what decisions their clients should make between now and the end of the year. The question I'm
Mhm.
asking is, does that tax accountant need, to understand like, hey, what's the profitability of your business looking like so far to be able to give good advice? Or
That's a good
can
point.
they just wait till, October and then just trying to pull something out of thin air?
So honestly, you make a valid point because I think the at the bare minimum, your tax accountant is there to make sure stuff is being done correctly, right? But then I think a proactive tax accountant will say, "Hey, Lola, how much money have you made so far this year? Based on your revenue or based on some of the expenses your business has, here are a few things we can take advantage of during the year to reduce your tax liability. Or these are some of the things you might want to do. You might want to consider maybe paying a little bit more than you would have paid." So, to be fair, I do think, yes, a proactive tax accountant should be doing those things. But I think what I've seen, and maybe you've seen something else, Terrell, like what I've seen is oftentimes it's just the bare minimum. And part of that is not necessarily on the tax accountants. It's just because oftentimes the financials are not even in a position where you can even have those strategic conversations because for whatever reason you don't have the right bookkeeper for your business, and so they're not able to get your financials to a place where that information can be shared with the tax accountant. So like I feel like a lot of times it should be a partnership between your tax accountant and the person that's doing your books monthly, to where they're like, "Hey, these are what the numbers look like." And then on your end, your tax accountant is saying, "Okay, based on where this is, like these are the decisions you need to make. These are some of the tax related decisions you need to make." But I think oftentimes it's like that information is coming in late. And by the time, the tax accountant reviews it, like you said, it's October, November, December. And at that point, it's like, what are you going to do with those numbers? I mean, the year is done, right? So that's
Yeah.
my view.
And I think this is probably the perfect place for a shameless plug. So shameless plug warning.
I welcome shameless plugs. Please plug
So
away. This is our
for
podcast.
for all of the business owners, I think that are looking for a bookkeeper, or they're looking for accounting support, one of the things that I definitely recommend is, and this is something that your bookkeeper probably won't tell you because they're probably not doing it, is really you're looking for someone who is not only just gonna work on the books in the background and send you
Mhm.
some random report every now and then, but someone who's actually willing to engage with your tax accountant. So some of the
Right.
things that we do for some of our clients is when we actually generate the monthly financials, like we often share that with their tax accountant to say, hey, so far here's what, the client's, profitability looks like so far. Like, hey, it's June. Here's what their financials look like so far. If we don't have a direct relationship with their tax accountant, we also tell the client, hey, you should share this with your tax accountant and ask
Right.
them, hey, based on, the profitability I'm seeing so far, is there anything that I need to do now to put me in a good
Mhm.
position to where, hey, we can maximize our tax strategy? Because your bookkeeper tax accountant relationship should be a collaboration, not just, hey, they only talk once a year. It should be an ongoing relationship throughout the year. So my shameless
I
plug
agree.
has ended. Now,
What exactly was the shameless plug for? I did not pick up on that. Are you advertising the TL Turner Group?
no, I mean, I'm advertising like a good process to have in place. Like, I'm
Yes.
shamelessly plugging, hey, here's what you should expect.
Yes,
And
and the
also, I
TL Turner
mean, the
Group offers
reality
that.
of yeah, the reality of it is we do it on the regular with our clients. So I mean, I
Right.
think that it is a minimum that you can expect this from, or you should expect this as a business owner from, different bookkeepers that you're working with, is someone who's willing to work with your tax accountant to actually keep that a collaboration, and not just, hey, the bookkeeper does their thing in the background in the dark, that you pay them and you have no idea what
In
they're
the
doing.
dark.
And then the tax accountant shows up once a year and they do their thing. And then they either surprise you and say, congratulations, you get a refund, or hey, unfortunately, you owe $15,000. I mean, because that is
Yeah.
one thing that happened this past year with one
Yeah,
client,
yeah. Yep.
where, what, I was in Chicago visiting a friend and hanging out with a friend. I get a call or a text message from from someone, and they were upset and notice, I'll say, and rightfully so, they were upset. They were like, hey, my accountant just texted me and said that, hey, I have a $20,000 tax bill and it's due tomorrow. And I'm just
Uh,
like, okay.
so many words.
I'm like, okay, let me ask some questions. Did they give any explanation? And he was like, we were more profitable this year. And so my tax bill is higher. And then the next question is, okay, all right, why didn't you find out about this earlier? And we're like, okay, all right, who was doing the bookkeeping? And it's like, oh, the same person who did the tax return was also the one that you were paying on a monthly basis to do the bookkeeping. So I'm like, this person has been seeing all year long that you were more profitable than their tax strategy they set you up with. And they didn't make any adjustments throughout the year. And I'm like, okay,
What
all
a
right,
shame.
see, that is a problem, is when they're even, and I think that's the uncomfortable thing for some business owners, is even sometimes when your bookkeeper is the person who files your taxes, sometimes they're not even thinking proactively, even when they have all the information and all the
Yeah.
pieces. So I think the tip to business owners is not only asking for your bookkeeper to provide, hey, here, what are my regular financials, is also asking them, have you spoken or have you provided this to my tax accountant, so we can proactively think about, what do I need to do to make sure I don't end up with this crazy surprise tax bill at the end of the year?
That is such solid advice. I actually think as you were talking, I was thinking about this. I think we should do an episode on like 5 things or 6 things, whatever the list is, that you should expect from your bookkeeper. But that's a really good one. Just communication and collaboration with your tax accountant. And if by any reason they happen to be the same people, please, please make sure that they are actively checking their own stuff to make sure that they are making adjustments based on where the revenue numbers are. Because listen, this is why, Terrell sometimes can be very direct, and I'm just like, patience. But in that situation, I would absolutely be like, you're fired. Like, immediately, yes, you're fired. Like, we're not even having a conversation. I may have a couple of words for you, but in that case, I'm just like, dude, it's different if you are not the one doing the books, but you're doing the books and you're doing the taxes, and this still caught you by surprise. And the flimsy excuse you have for me is that my business made more money. Yeah, you know my business made more money because you knew the books. So how exactly
Yeah.
did that happen? Anyways,
Well,
so
I guess I mean
trust me,
I
we have a
was
lot more of
I
these
was
stories.
trying to be a little understanding. I'm like,
A hot
well,
mess.
maybe this person has like a firm and someone in his firm does the bookkeeping and then he does the taxes, but in this person firm, it was a one person firm. He does the books for all his clients and he does the
This is
tax
just getting
returns. So
worse.
I'm just
This is
like,
getting
there's
worse.
no way he should have missed that. Like, he should have
Yeah.
known. Like, here's the tax plan that I gave them at the beginning of the year. Here's how they're doing throughout the year. Oh man, they're making more money than the plan that we set up. They should have made some adjustments, but they didn't. So,
And
and
I'm gonna
now,
say it. I'm just gonna say it real quick. This is why it is important for you not to try to be cheap. And this is the whole point of the podcast, right? To educate you. This is why you don't hire a tax accountant to be your CFO. You don't hire your tax accountant to be your bookkeeper because the reality is, unless that person is trained in both areas, things like this are going to happen, right? And you are better off investing the money. And we talked about this, and we've talked about this and we mentioned this every single time. Like, decisions like this can cost you thousands, even in some cases millions of dollars. So just do it right the first time. And that is extremely important. We'll do another episode on things to look for when you're trying to hire an accountant. Like, there are so many important factors you need to consider. And a lot of times it's just simple asking the right questions, right? And that's my little, I don't know if it's a plug, but that's just my point. Is it's so important to make sure that you're hiring the right person for what your business needs, because if you don't, it's going to cost you headaches and a lot of times just a lot of money that you don't need to be spending. So that was it. Sorry.
absolutely. And so now I want to switch a little bit because I mean we talked about, this series is in the profitability series. And
Hmm.
I think, we said that we're going to talk about smart pricing. But before you
Yes.
can talk about, how to improve your profitability, I think the first step is you got to actually know whether you are profitable or not. So I do
Correct.
think point blank is you do need to be able to see your profit and loss statement. And you need to be able to actually see, okay, all right, are we making more money than we are spending? And
Hmm.
the thing is, if once you look at that and you realize, okay, all right, yes, we are making more money than we're spending, or no, we're not making more money than we're spending. Now
Hmm.
we get into, okay, all right, what can you do to make that situation better? And the first one we're going to talk about is smart pricing. Now, before you jump into the details of it, I'm one that I like to keep things simple. I like to make sure that things are very clear and very basic.
Hmm.
Because I think that if you try to complicate things too much, one is you either forget or you don't understand it yourself, or the person you're trying to help understand, they're not going to follow it either. So when it comes
Right.
down to smart pricing, when I think about the term smart, what comes to mind? Like, how would you define the word smart?
Um, I would say, I think immediately, well, what comes to my mind when smart is the acronym, but this isn't the acronym. This is just simply what is the definition of smart. Like, the first thing is quick to learn, quick to do. Like, you're reacting quickly. Like, that's how I would define smart.
Mhm. Gotcha. I mean, and I would say the same. I mean, if you said that, hey, this person is smart, usually you're trying to describe like, hey, this person is informed about what's going on, or hey,
Hmm.
this person is in the know of whatever the subject matter is. Like, this person is smart at math, meaning
They're
they
making good
can
decisions.
understand, they know how to look at the information, and they know how to make a
Hmm.
decision. So now,
Hmm.
when it comes down to pricing, you know, what does that concept of pricing? What does pricing actually mean?
I would say it's just, I mean, let's put it simple. The price, okay, I know we're not supposed to use definitions, the words to define the words. So I would say the dollar amount at which you set your product, or how much it costs for people to buy your product. There you go.
Got it. Got
Simple.
it.
Yes.
Awesome. So, and I think when you start to put those things together, it's smart pricing. I think it's is as we said, the word smart. When you talk about that definition, it is like, being in the know, being quick to learn,
Mhm,
it's agile. I
mhm,
mean, it can respond to whatever the factors are. And I think pricing is, hey, the dollar amount that people have to pay you to actually get it.
mhm,
And I think when you put those
mhm.
two together, it's like if you're trying to have a profitable business is you got to look at pricing as something that can respond to whatever the situation is. Like right now, we're going through an inflation cycle. Like people who set their prices a year ago and haven't moved their prices, like that's not smart pricing at all. Your pricing is a little slow
Word.
because your price because I mean when you think about it, the costs are shooting through the roof. I mean, if
Mhm,
you think about, let's say, let's take a business that sells a physical product. Your freight cost has shot through the roof. But if you don't change the price that you're charging your customers,
right.
then you are immediately losing money because the cost of everything has gone up. And if your prices are not able to change and adjust based on what's happening in the market, then I would say is you probably don't have smart pricing. And that's going to
Yeah.
hurt you in the long run.
Yeah, that's good. No, that's good. And I think it's also like along with one of the things that we mentioned was reactiveness. Like how quickly are you responding? Because like you said, like freight costs are much higher than they've been. And I think part of this is really just being in the know about what's going on in your industry to understand like as those things are happening, are you responding quickly enough to where you're preserving your gross margins or how much money you're making, after you take out the cost of what it is to do whatever it is that sell whatever product it is that you're selling. So I think responding quickly is a key importance in making sure that you're staying profitable and you're engaging in smart pricing.
Because, and I think, and I'm curious of what your thoughts are, is when it comes down to pricing, one of the other things that we did an episode about talking about, like, the economics, inflation, supply and
Mm-hmm.
demand is if demand is exceeding supply, then price is probably going to be higher because more
Mm-hmm.
people want something that not everybody, like, let's say, for example, you have 100 units of whatever and 1,000
Mm-hmm.
people want it, you're not gonna like decrease the price because that just doesn't make sense. What you're likely to do is raise the price since you have
Yep.
100, but 1,000 people want it. I mean, now
Mm-hmm.
if it's the other way around, your price may go the other way. But how quickly do you think companies are looking at, hey, the demand for our product is gone up, so let me adjust the price? Like, how fast do you think small businesses respond to situations like that?
I honestly don't think they respond quick enough, especially if it's something that doesn't impact them directly. So I'll give an example. In the case of, let's say, gas prices going up, right? Like if gas prices are going up, so your transportation cost is going up, it might take a while, especially if you're a small business and let's say you're buying your product. Let's say you sell products, you're buying your products from Sam's Club, just as an example. And let's say you're a restaurant. You might not necessarily feel the pain of that increase compared as quickly as someone who, for example, is getting food delivered from like Cisco or something, like a company that actually delivers food to your door, like a bigger restaurant. When you have multiple restaurants, like you'll immediately see that reflected in the cost that they bill you weekly for the food that they're delivering. And so I think if it really just depends on the pace or how quickly you're seeing those prices impact you, um, then I haven't really seen companies respond, I guess prior to getting to that point. It's kind of like, as you start to see the trend, like for example, in situations where you start to say, okay, gas prices are going up, that's probably going to be reflected on, hey, how this goods are getting, charged at Sam's Club, for example, or whatever. And hey, it's probably going to cost me more to buy them, like those kind of things, to where you're almost anticipating it because you're starting to see this, the trends, and then adjusting your prices accordingly. But I think a lot of times, unfortunately, is if it takes you longer to see the impact of the increase, then you're more likely to delay in your actual response. And then it's kind of like after the fact. And at that point, your margins are already kind of starting to erode over time.
Mhm. Gotcha. One of the examples that I think about when you and I we've traveled internationally and when we've gone to, African countries and we've gone in the market to
Mm,
where anytime we've gone to like some of those markets where I remember we were in one where you look at this souvenir at the place in the very front
oh,
and you see the price of the items at the very front. And then when you walk further to the back, you realize it's the same exact item, but the price is very, very different. And one
yeah,
of the things that I thought was pretty interesting is a lot of times the person who has the booth in the front, their prices were a bit higher. And part of it because they knew that, hey, when people stop at this market, they're in a rush. So, hey, there are more people who show up at the front. So, there is a higher
right,
demand for the stuff that's in the person's booth in the front because very few people ever make it all the way to the back. So, the
hmm,
guy who had the booth all the way in the back that takes you like 5 minutes to get back there, that person he would have the same exact items, but his prices would be lower. And I think it was a very clear picture of him realizing the demand for my stuff because I'm all the way in the back is lower. So I
right,
have to drop my prices to try to convince people to come all the way back here. Whereas the person who had the very front booth knows that, hey, everybody who comes into this market has to walk past my booth, which to
right.
them, they're like, hey, I have pretty high demand, so I can afford to respond to the situation and have a higher price. And it's like when I talk to business owners a lot of times, I often wonder, it's just like, do they even have any way to recognize how much of a demand is for their product?
That's a good question. Actually, one of the things that I thought about um, when you were talking about that was the. Do you remember how the people that were in the back, like had the back stalls, how they actually ended up coming to the front, like as we were getting off of the trucks, like they were like, "Oh, sister, I have a shop in the back. Like I'm selling this for you. Come see it. Come see it." To where they got smart because they knew like if I'm in a hurry, the chances and the likelihood of me ever like going into the market further were very slim. So they started getting wise about meeting their competition where their competition was, and then basically competing almost in a sense and offering what they have. And I don't really think, I mean, I've seen some of our clients or some of our clients, what they do is they every now and then they'll order their competitors products, right? And they'll sample it and they'll try it and they'll see, like, especially for products like in food, like, is this good? Like, what's good about this? How is the packaging? Like, how are they pricing? Like, all of those things are so important. And I think sometimes there's like such a huge focus on just serving your customers that there really isn't that review of kind of making sure, hey, am I at pace with how my competitor is pricing their products? Am I at pace with what my competitor is doing? Like, kind of keeping an eye. Like, one eye is kind of looking straight forward and you're focused on where you're going, but then the other eye is keeping an eye on what your competitor and your competition is doing to make sure like you understand, like, hey, how are they pricing their products? How are they positioning it? And the great thing that I even remember about that market where we were was they would actually bring their products with them. They would have kind of like a preview to kind of bring you in. And so at that point, it's like you're meeting me where my competition is, or meeting you where my competition is. And I'm actually showing you that I have an offer of this product that they're selling you, but I can give it to you at a discount, or I'm basically serving like my value proposition in that moment to kind of show you what is distinct about me in that moment. So I don't know that a lot of businesses are honestly doing that, but it is so critical to be able to do that and kind of study your competition and understand how are they pricing? Like, are there things that we need to be changing?
Yeah. And the thing about it is, to be fair, is that it does take some extra work, because I can
Oh yeah,
understand why
absolutely.
people don't do it, because,
And
if
money.
you're
Yeah.
gonna be able to look at, what's going on in the market, you look at what's the behavior of your customers, and then
Hmm.
you factor that in to say, hey, well, here's what's happening with my price based on these changes. And I do think it does take some work. So I understand why a lot of people kind of hesitate. But one of the things that I have seen is the businesses that are profitable are the ones that can have that smart pricing where their price has the ability to change based on the different factors that are happening. And I think probably the most familiar example we have is probably when you look at a stock market, is because the stock market is, I would say, it's probably beyond smart pricing. It is like
Hmm.
super intelligent pricing, because it is responding based on every transaction that happens. Like, the stock price you see today is based on people buying and selling that stock. So it is taking those thousands of transactions into account, saying, hey, the last person who bought this stock bought it at X, or is looking at
Hmm.
averages. And I think is really changing based on what is happening real time. Now, for a lot of business owners, they probably just don't have the time to do that. So, one of the things, I guess, if you think about it from that perspective, is that, hey, the stock market has the ability to change because there's a lot of technology. It changes so frequently. What kind of advice or tips, or what, yeah, what guidance would you give to a business owner if they wanted to say, okay, all right, I see how the stock market can do it, but how can I use smart pricing in my business? Like, how
I would
frequently should I be
say
changing it?
I would say be practical because, like you said, Terrell, the reality is that they're honestly Fortune 500 companies have whole departments that just focus on pricing. You have groups that just focus on collecting customer feedback. You have groups that focus on market and competitor analysis. Like there are so many, it requires so much to go into it. But my
Mhm,
advice, practically as a business owner, I would tell you to focus on two things. I would say understanding your competition is key, but I wouldn't overcomplicate it. One of the things that one of our clients does is every month, like they'll order, pick a competitor in the area of where their business is, and they'll order something from that shop. And the point of ordering something from that shop is to look at the packaging, to look at the new products that they're offering. Like if there's something that's a big hit, that's popular or whatever, that has, a ton of great reviews on the website, like, hey, what is it about this product that they're selling that is so fascinating, right? And you don't need to do a big production. A matter of fact, is just order it, taste it. Does it taste good? Like, what is it about this that's kind of distinguishing them? Like, what can we do differently about what we're offering? That's the first thing. I think the second thing also is really just when it comes to pricing, always getting customer feedback. I think sometimes we underestimate the value of the customer feedback, but the reality is if like your customers are saying, "Hey, this is a great product, you should sell more of this," right? And maybe this isn't a product that you have on the menu that is, free a frequent sell or sale or whatever it is. Like, you can change your pricing accordingly. Is if this is something that's in high demand, maybe you offer it on certain days where it's like, "Hey, every Tuesday we sell this type of donut, or every Tuesday we sell this type of candy," whatever it is that you're selling, to where then it incentivizes people to come back on that specific day, and you can package it with other products that you're selling. Like there's just so many things you can do. So I would say two key things is take in a practical way, evaluate what your competitors are doing, order whatever it is, even if it's a service, like buy a course. If you're if you have a business where you're selling courses, like buy a course from your competitor and see, is it their energy, is it their charisma, like what are they offering that we don't. And then the second thing I would say is just really take time to collect feedback, right? Your customers are going to tell you whether something is working or not, and then based on that feedback, you can then adjust your business strategy or your pricing strategy. Like, okay, maybe we're pricing this too high, or maybe, hey, we have an advantage because this is something that people really like, or people really enjoyed this course. This is a very popular course. Like, for example, one of the courses for us that has been very popular is the whole financial statements explained in less than 10 minutes. Like, okay, if this is something that's really popular, you know what? Maybe we need to price this at a higher price. Or hey, maybe this is a good way to use this to promote another product. So those are the two things I would say and advices that I would give to a business owner.
Yeah. Because I think what you said about the listening to feedback is a great one. And one of the things that I
Mhm.
tell a lot of our clients, and this is something that, hey, this is something that bookkeepers probably aren't telling their clients enough of, is whatever your price is for your product or your service, when you tell a new prospective client the price, if they say, "Okay," very fast and they're ready to pay
Ooh,
you, that's a sign that maybe your price is a little low because
lesson learned.
if
That is a tough lesson to learn. Ooh, when they say okay, send over the bill, you're like, ooh, that price was too oof. Or they don't pause and they don't say, okay. You know, it's just like, oh, okay, that's fine. Send over the bill. You're just like, dang it, I priced that too low. But yeah.
because I think what that starts to show is that starts to show that they are very eager to buy your product at the price that you
Yes,
just gave them, which means
exactly.
there's a high demand for it. And I think when you start to do that, you can start to ask yourself, like, okay, all right, maybe I should look at increasing the price because what a lot of business owners, like smaller businesses that I've seen, what they've done is there is almost like that's what they're aiming for. They want to be able to just tell people the price and they say, well, if I tell the person the price and they tell me they want to buy it immediately, like, hey, that's success. And I'm like, no, that could be a sign that your price is too low. And I think
Exactly.
that's feedback that a business owner can take and really respond to and say, okay, you know what? That's some good feedback. Maybe we need to increase the price slightly. And I also think of just having that fresh sense of, especially if you are a service-based business,
Hmm.
is although it is easy to come up with a pricing calendar to say or schedule to say, hey, here's our flat fee. But oftentimes when you're providing a service, the service that you're providing may, or the amount of effort or the amount of value that the customer places on that may be very different if you take time to really understand the client and
Mm,
understand their situation. Because let's say, a person who is, who comes to us and says, like, hey, Terrell, I need some financials created because I'm trying to raise $2 million in investor funding. And oh, yeah, I need it in the next 2 weeks. The price that they get is going to be very different than the price of someone who says, hey, I think I need some help on my financials. I'm not really sure. I'm like, okay, all right. That person probably doesn't have that strong of a demand. So I do think
right,
like listening to how painful is this problem to my customer? And then
right.
really asking yourself, should my price change based on how painful the problem is that I'm solving for?
That's really good. And I think that is really the smart, right? The adaptability. Like, how nimble are you when it comes to pricing? You're not just doing it. And that's one thing we had to learn, right? It's just the whole, okay, not everybody is a blanket statement. Like, just
I
this is
mean,
what
that's
your
what we're
price
still
is.
learning.
We are, oh, yeah, no, no, absolutely. We are, we are still learning that because we have definitely been in positions where we've agreed to do work and then you get into the work and you just like, oh, this is a lot. We should have charged you more for this.
I mean,
But no,
and I do
I
think,
definitely think it's a lesson learned. Yeah.
and I think to that point is one of the things that I've learned from, listening to other accounting firms and other bookkeepers. Is one of those things that I will say is a sign of a good bookkeeper is not necessarily just whoever is going to be the cheapest. Because I
Mm,
will say is when it comes down to accounting and bookkeeping, often you get what you pay for. And I'm going to say
absolutely.
often you get what you pay for.
Mhm.
And if someone gives you a very cheap price, it is probably because what they are going to deliver you to you is not the highest quality. Because what I
Absolutely.
often find is those who offer a very cheap price, eventually they start reaching a capacity very quickly, or they're so busy that they can't put in the level of support that you need as things in your business change. So I always
Mhm.
say, you want someone who can deliver the value, and someone who actually has a good reputation for delivering the value, which means they might not be the cheapest person. And what I have seen is a good sign of a bookkeeper is someone who will honestly tell you, like, hey, before I give you a price, I need to actually understand, your business a little bit more. I need to ask some questions because my price is going to be based on several different factors, and one of them is what you need, your business,
Mhm.
your situation. Because if the bookkeeper can't come up with a price that makes sense for your business, chances are they might be just pulling some flat rate off of the shelf, and it might not work for you. I mean, it's almost like,
Mhm.
if you were coming in to get your car fixed, one of the things that mechanics do oftentimes is they do a diagnostics first, that then tell you, hey, here are the problems. So they know, here's what I need to work on, and here's the price that it's going to cost for me to do that. And you feel a little bit more confidence because they're going into this situation with some clarity on what they need to focus on, and you have an idea what you're paying for. Because if you're just getting some off the shelf, it's like you kind of have that question of, what am I really paying for? Because they
Yeah.
don't really know my business. They don't really know my problems. They don't know what they're getting themselves into. So what am I really paying for?
Yeah, and really, when it comes to the strategy part of accounting and finance, it's not a one size fits all. The transactions and how to close the books may be the same, but it's not a one size fits all. So if someone is just pulling a prize, like you're like, hey, I'm looking for bookkeeping services, and we're actually have another episode we're gonna do on that of like how to hire the right kind of help. If some you just go to someone and they're just like, it's gonna cost $500, they haven't looked at your financials, they haven't done anything. They haven't even asked questions. If someone is so eager to take your business without asking the right questions, that should be immediately a red flag of, maybe this isn't really the right person for me to do business with. But yes, I think that's important.
Absolutely. Absolutely.
Mhm.
So, I mean, to wrap it up, I mean, when we think about, profitability, I think step one is really you got to get a look at your numbers. You got to know whether
Yes.
you are in the black or you're in the red. Now, after you know that, I think one of the key areas to profitability is smart pricing. Does your pricing have the ability to change and adjust based on the different business factors going on, like how much of a demand, also responding based on what does your cost look like internally, what's going on with the market. If we're in a period where inflation is happening, then you probably, maybe it should reflect in your pricing as well, because that's what smart pricing is being able to respond based on the relevant factors that are going on. And if you're running a business and your pricing isn't smart, then you're probably going to find yourself in a position where you're going to be eventually losing money. So thank you for tuning in to another episode of the stuff your bookkeeper isn't telling you. So until next time, I would say come back and see us.
Hey, it's your girl Tia Robertson. I'm the host of Entrepreneur Insider. Right here on RETV every Thursday at 6 p.m. Eastern for entrepreneurs and news that you need to know about. See you there.
Tune in to Millionaire Man Cave, only on Relationship Entertainment Television, Tuesdays at 8 p.m.
This is Tyron
and Nicole with your weekly RATV news break. Each Thursday at 12 noon Eastern, we'll come to you with the latest news, trends, and more with a positive spin.
We know there's a lot of positive news that doesn't get reported, but we want to give you the opportunity to share your story here on RATV. If you have a positive news story you want us to share, you can submit your story to news@re-tv.net.
Don't forget to subscribe to the Relationship Entertainment Television YouTube channel. Download the new RATV Live app on your mobile device and follow Relationship Entertainment Television on your favorite social media platform.
Don't forget, make sure you tune into the RATV News Break each Thursday at 12 p.m. Eastern. Until then, be blessed and be great.
Welcome to What's Going On? My name is Demetra Joe. Each Wednesday, you can find me here at 3 p.m. I'll be over here discussing different things that are going on and try to bring you a boost of positivity for your week because we all need this. We're going to share some feel-good stories. We might find a hometown hero. We may take a look at some trending topic. And sometimes we might even find a lesson in a not-so-warm and fuzzy story if we can. I'm Demetra Joe, and I'll see you guys on the next episode right here on What's Going On?